Hi viewers, welcome to our Remarkable Finance channel. Please like, share, subscribe, and click the notification bell to get updated with our new videos. Have you ever heard of a depositor complaining against a bank because the savings account has been closed due to a zero balance? In our video today, join us to know the pros and cons of having a savings account with a bank. What has inflation got to do with bank savings? Watch the video until the end to learn about savings deposit, inflation, and other options of saving money. A savings account has simple and easy to manage transactions. An account is subsequently opened after presentation of a few documents with the bank. Usually, it requires government-issued identification cards such as driver's license or a passport. As we all know, there would be the passbook and an ATM card issued upon opening the bank account. With the passbook, it is easy to monitor. The debits and the credits can easily be followed and understood. At a glance of the current balance, there is a good understanding how to put the money to good use and what it can buy. As an emergency fund, the savings account is an excellent source of fund for unforeseen events that may happen. Money saved in the bank is considered as liquid asset, which is beneficial in case of financial hardship and fast cash is required. It may be used for short to medium-term projects or in case of an emergency. Savings account is one way to save for a big expense. Sometimes a big amount of money is needed to fund for an expensive purchase such as buying a car, a diamond ring, or gold jewelries. There is also a sinking fund savings account, which is good for those projects because money won't be at risk. Now, why is it called a sinking fund? It is the fund set aside to be used at a later date. Emergency fund and sinking funds are similar in such a way that there is no specific plan for the money. There is no specific time to spend it, but the fund is safe and available anytime when needed. There are several ways of literally saving money. First way is to put it in a piggy bank. There are many forms of a piggy bank. Anything that can hold money, currencies, or coins can be a piggy bank. It may be a covered bottle, a box, or a plastic container. Next way is to secure the money inside a bottle, dig the soil, and bury it on the ground. Those two ways are dead savings as it does not earn interest at all. The third way is to open a bank account and deposit the cash. In accounting or bookkeeping, it is called cash in bank. Savings account has several types. There is the money market account, basic savings account, traditional savings account, zero balance savings account, regular savings account, and many more. Most important to note is opening a bank account without a maintaining balance. If it does, make sure it is the least minimal amount. Once the current balance is below the maintaining balance, the bank will debit the account monthly with a specific amount. This is why a depositor's account is reduced to a zero balance in the long run. Not knowing the bank policy on the maintaining balance, the account can be debited monthly bank charges until the account reaches the zero balance and consequently closed by the bank. It would come as a shock to the depositor to have a closed account. With regard to closing of account, a dormant account can be automatically closed by the bank without notice. A savings account is considered dormant if it is inactive for 2 years, while a checking account is in dormant status when there is no transaction for 1 year. Saving money is either for short or long-term investments. One disadvantage of long-term investment options is when the money is needed immediately, but the maturity date is not yet due. The money cannot be withdrawn. Moreover, saving money is actually losing money in long-term savings, and that's where inflation comes in. Due to inflation, the value of money in a savings account decreases. The rate of the currency falls or decreases while the level of prices of goods and services increases. Inflation refers to that rate at which the currency declines in value over a specific period of time. Another drawback of short-term saving money in the bank is the low interest rate. The deposit earns very minimal interest, so it is not a good investment. It does earn an interest, but at a very low rate. Here's an example. At a rate of 1%, $1,000 savings will gain interest of $10 only. If a savings account will earn only $10 after 1 year of deposit in the bank, it does not sound sensible. Diminished by the inflation rate, it has no value at all. The effective way to save and make money is to invest in things that will gain in value with time. What exactly those things to invest can differ a lot, and what works best for each person. It will depend on how much one understands finances and the different markets available. Buying and renting out real estate will surely generate money in the long run. However, it needs a good tenant to make that really work. There are also investments on cryptocurrencies, a digital currency wherein transactions are maintained by a decentralized system. Bitcoin is the most popular cryptocurrency nowadays. Some long-term investment options are as follows. Certificates of deposit. Issued by banks have much better interest rate than savings accounts. Certificates are for 1 to 2 years. The main disadvantage is that money is held for a definite period of time. Get S&P 500 index funds. If long-term investing is what you're aiming for, invest in index funds like the S&P 500 because index funds offer immediate diversification. It allows investing in the top 500 American companies like Amazon or Berkshire Hathaway dividend stock. Investing in stocks is always risky as the stock market is unpredictable. It is then advisable to invest with companies that give dividends on stocks. Dividend refers to the percentage of profit sharing with stockholders. There you go, guys. Saving money in the bank is not so profitable to generate enough revenues to fund big expenditures like buying expensive cars or taking a much-deserved holiday. Inflation rate decreases the face value of the money in the long run. It is best to venture the money on stocks and other investments to generate more revenues. We will see you next time on Remarkable Finance. We upload videos every other day. Please do not forget to like, share, and subscribe. Share with us your thoughts on saving money in the bank on the comments below. We will be glad to read and reply to your comments. Check out other videos from our Remarkable Finance channel. Thank you for watching. Bye!